Hey guys, welcome back to my YouTube channel. My name is Alayla and I trade Trendlines. As per someone's request in my previous video, they want me to show my analysis on gold. So I'm going to show you how I analyze gold. This is going to be entirely different from volatility, all right? The only similarity is the trend lines. I don't really do the other stuff. It's simple. It's quite simple. All right, so let's get into it. So we're currently on gold. I start from the 3 months time frame. The 3 months for Forex, it has to be on the highest time frame possible, which is 3M, 3 months. All right, so on the 3 months time frame, we can clearly see that it's in an uptrend, right? It's literally going up. It's trending up. So what we do is we just come in with our trend lines. Yeah, I'm gonna show you how simple it is. From point A to point B, ensuring that all candles are on one side of our trend line. All right, and this is on the higher time frame. So it's the highest time frame. So let us thicken that. All right, now we are on the 3 months. I'm going to see if we can come in with a steeper trend line. I don't want to on the 3 months time frame. So let me just go down on the monthly. So we know that this is the main trend line here. We're on the monthly. So I'm going to adjust the trend line here. I don't want any wicks outside. So I could have done this on the 3 months, but I just wanted to make sure. So I can come in with a steeper trend line here because we see that this has pushed up from the first trend line that we have here. So our new point A would be at this, where we left off at on the 3 months time frame, connecting to this low right here. All right, now we also see that there is a trend forming that has completely pulled away from this second trend line here. So now we can start a new trend line with our point A being where we left off here, and ensuring that all candles are on one side of the new trend line that we're going to draw. Now we see that the market is following along this trend line here on the monthly time frame. Now we can go down to the weekly. Also, let me show you. Also on the monthly time frame, we can see that this was the last little pullback that we have here. So the person made mention that they wanted to see me use the Fibonacci tool as well. If you look here, from this point, from the previous low to the start of the pullback right here, we can see that this small little candle touched the 38% fib line. So I'm gonna make this available on all time frames. Just a moment here and show you what I'm talking about. So look, do you see that? It touched the 38. All right. Let's go down on the 1 hour time frame. Where is it? Oh, not the 1 hour time frame. All right, so do you see what I'm saying? So from the start of the pullback, the market touched the 38 right here. All right, so we can expect the market to start pushing upwards, but as you can see, it's just consolidating at this point, refusing to break above the previous high on the monthly time frame. So we're on the weekly time frame now. Let's adjust our trend line here. I don't play about my trend lines. Every single wick, everything has to be on one side of the trend line. All right, so the market has pushed away from this last trend line that we have here. Let me see if it's going to make sense to come in with another one. Well, it would have been like this at first. You see the market, it would have been like this. The market broke it here. So we would have to adjust. And with this adjustment, I mean, we could let it stay. We could, because the market can continue to continue to consolidate until it touches the green trend line here and then push to the upside, finally breaking the previous high. It can do that. It can break it and push down. It can whatever the market does, I react to it. I don't just create a bias just like that, you know. So let's just delete the Fibonacci tool because I don't really use it. As you can see, I only use it on the higher time frame, like on the monthly time frame. But let me just explain. With the trend line strategy that I use, when it comes onto Forex, I only have my trend lines to outline the directional move of the market if it's trending. And I say to myself, every pullback that makes its way towards the trend line, that's what I trade. All right, so it's completely different. With VIX, there are certain rules. You have to wait until you have 2 swing highs, 2 swing lows. You have to wait until it reaches a 38. You have to do a lot of things when it comes down to volatility. But with Forex, every single pullback that makes its way is tradable. Let's go down on the 4-hour time frame. I don't trade Forex on the lower time frame, like on the 1 hour down. I don't trade it on those time frames. It has to be 4 hour and up. The lowest I'll take a trade on is the 4-hour time frame. So let me just show you. Everything better showing up. Oh, better be. All right. So this is what I mean by every pullback that makes its way to my higher time frame trend line, I trade. So we have, let's see. We have our trend line from here connecting to here. So we have a 1 touch point. So it's 1 touch. Oh, let me go in. Let me zoom in. All right. So we have 1 touch point, 2 touch point, 3 touch points. So we know that the market is respecting our trend line that we drew. Say the break of the trend line is our entry. We would enter at this point. And this is Forex. Our stop has to be at the previous low. I'm not playing. It has to be on the other side of this green trend line or at the previous low, because them news, all of them somewhere there, oh my God, volatile. So this is basically how I trade Forex. I just have my trend lines, every pullback that makes its way. Once it's a trend as well, so trend, if it's on the 4-hour time frame, something like this, I won't engage in. I won't engage in something like that. I would probably engage in something like this because we have a high and we have a lower high here. But if it's something like this with just 3 candles, no, I won't engage in that. All right, so I'll probably, yes, I'll engage in something like this because we do see a trend here, and I would just leave it alone. So let's say I wasn't, oh, let me just finish this first. I would target the high, and you see that the market played out. If the market starts to pull back, I'll draw my trend line from point A to point B. If I see that it breaks my trend line without even creating a trend, I don't engage any at all, and I don't go down to the lower time frame. I have to stay on the 4-hour time frame for me, right? So I do the same thing here. I don't really see anything to connect it, so I wouldn't do anything right here. I wouldn't do anything right here either. It would be right here, right here. As you can see, the market came. So look. Point A, point B. And you see that the market wicked out a bit, but it still respected it. That's basically how I use my trend lines. And I trust myself. All right? I trust myself. If I had come in with a trend line here and the market broke here and just continued up, I wouldn't enter any at all because there still needs to be a trend. Maybe that's why I don't really talk about Forex like this, because certain things that applies to the trend lines, it doesn't apply here. Y'all can see it doesn't apply here at all. The rules that I created for myself when trading synthetic indices, it doesn't apply here at all. But as I said, every pullback that makes its way towards this green trend line at the bottom here, this higher time frame green trend line, that's what I trade. And the break of the trend line here, that's basically where I enter. But recently, I'm not really interested in gold at all. I'm not interested in gold at all. No meow. But anyway, oh, let me go to the current market here and see what's up. Let's see what's up. So I always have my key levels. I don't know why I didn't start with that at first, but I always outline my key levels, like areas that the market comes to and gives some reaction. So we have a key level here as well, because we have 1 touch, rejection, yada yada yada. This is the internal structure here. So I could put a line there, but nah, it's the main structure is between this high and this support here. So it's bouncing in between. I am not interested. As I said, I place my entries on the daily or the 4-hour time frame. I'm not interested in gold whatsoever until it breaks above or below and gives me something proper according to my trend lines. So this is the end of the video. If y'all like, please subscribe if you haven't already. Share to whoever trades gold. Yeah. Yeah. Thank you for watching. Bye.